Welcome to the Financial Food Pyramid, brought to you by Kanjo.com. I like to use the Financial Food Pyramid to illustrate the concept of diversification in a portfolio. When I was a kid, they used the food pyramid to tell us to eat many different kinds of foods, a little bit of carbohydrates, a little bit of protein, a little bit of fat. And that way you could get a balanced meal. It's the same thing with investing. You should have a little bit of everything. And in this video, I'm going to talk about the Financial Food Pyramid for a moderate portfolio. Please remember that this is a hypothetical example and shouldn't be construed as investment advice for you specifically. Let's start with commodities. Commodities are a high volatility investment opportunity and they should be used sparingly in the portfolio, but they do provide an element of diversification, so they have some value. Next on the list, we have cash and cash equivalents. These securities don't provide a whole lot of return, but they are good to have in the case of an emergency. If you lose your job or something, it's good to have some cash on hand. Next on the list, we have real estate investments. Buying a house is probably the single best way to build equity, so real estate investments tend to be a decent part of the overall moderate portfolio. But again, if you have too much real estate, you're overexposed. And real estate investments also take up a lot of time and maintenance and can be volatile depending on circumstances. Next up, we have bonds. Bonds are a great way to diversify. You can get some corporate bonds, some municipal bonds, and some government bonds, and hedge out a lot of your different risks and get constant streams of income through the interest that's paid on these securities. Finally, the biggest group for most moderate portfolios should be stocks. Now, I know stocks have taken a beating over the last 5 to 10 years, especially with the subprime mortgage crisis and the dot-com bust. But over the long run, stocks do provide very, very good returns in the form of dividends and capital appreciation. And as a result, they form the fundamental building block of any moderate to moderately aggressive portfolio. I think that this is a good way to look at diversification, to look at having a lot of different things in your portfolio and understanding how having many things reduces the overall risk while still giving you a good solid rate of return. Thank you very much for watching, and for similar videos I recommend you check out my website www.kanjo.com.